We see basically a 0% move in, or not a non-move in producer price index. And really what this is doing, folks, it's really putting the Fed in a quandary. I don't know what they're going to do. They want to raise prices. They want to raise interest rates for the first time in 9 years. Hard to believe it's been 9 years since the Fed has raised an interest rate. But anyway, they want to desperately move, and they've been poising and positioning themselves for this move to raise interest rates for the last 6 months. In the month of June, next month. Now, they've been talking about maybe September, but nonetheless, they're in a bad position right now. They have no tools in their toolbox. But one of the things that Janet Yellen has talked about is they've got to see some sort of stabilization coming into inflation. And we continue to see, basically, for all practical purposes, we continue to see deflationary pressure. I don't know how they're going to raise rates. And I think this is why the markets are reacting in a positive way to bad news. And somehow, way, shape, or form, the inflation rate has to come up. Now, I'm not saying that. The Federal Reserve has got to be saying that to themselves. So, I want to repaint an old picture for you. I guess we're going back 7 years now. 6 years, 7 years. I wrote an article called Reset Button. Some of you remember it. It's probably still on my website somewhere. Because as we remove really old stuff, I think we've left that. And the premise, one of the premise of the article was the idea that I believe that a one world currency is going to usher in the one world government. If you're listening to this program for the first time, and maybe you don't know how the story ends for mankind, we do. If we are followers of Jesus Christ, we know how the story ends. Right? So we know that there's a one world government at some point in time. I believe it's going to be a currency that's going to usher that in. And I could go into all the details to why I believe that. That was one of the premises of the article. But here's what I wrote in the article. First of all, everything that I said in that article has happened. And now looks like we are pushing up against one of the last things. And one of the things that I said was there will be a realization by the Federal Reserve. I think I may have said if they do quantitative easing, because I don't know that they'd even started quantitative easing yet. We were just kind of anticipating that. But I said nothing is going to work in this recovery. Nothing is going to work. No matter what they try to do, it's not going to work. As hard as they try to make it work, because we're in a very different situation than we've ever been in any past recession. And nothing they do is going to work, but the fact is, since every recession since the 1970s, early 70s, we have seen the Federal Reserve cut interest rates like 5% or more during these recessions to help get out of the recessions. Well, obviously, this has been very different. They don't have any tools in their toolbox. They can't do what has been a normal procedure for the Federal Reserves. They don't have those toolbox. They've been forced to do all this quantitative easing, pouring cheap money into the market, hoping to raise the market, which they did, hoping to, and it's a false positive, but to raise the markets, creating a wealth effect. The premise of my article is the wealth effect's not going to work. Nothing they do is going to work. Once they come to the realization that they can't get GDP up, and this was all based on the do-nothing Washington that we have seen, which I assumed then, or predicted then, however you want to look at it, that nothing was going to change, and nothing has changed, still hasn't changed, was going to stay in effect, then the only thing that they're going to be able to truly raise GDP is going to be through inflation. And they've got to see inflation come into the market. My concern was in the article, my concern is today, as I look at producer price indexes and still looking at deflationary measures, that they need inflation. I got to believe that the Federal Reserve is going to try to inflate their way into prosperity. Why do I believe that? Because they don't have any other recourse. They just don't. I mean, somebody call me and tell me what they haven't done yet. Now, long story short is that's not going to work either if they do it. But they will attempt to do that before they move on to some sort of real currency crisis or currency issue. So, I got to believe we're going to hear some conversations run up as trial balloons by some of the Fed presidents in the next week or so, maybe even today, in the next week or so, conversations in reference to inflation. You can almost count on it. It's going to be a huge issue. It's going to be a huge problem. Here's the problem. The average worker in America has not seen any wage growth in 10 years when you factor in what little inflation we've had. We, for all practical purposes, have not seen any wages grow. Because when you factor in healthcare costs, healthcare burden, healthcare insurance, out-of-pocket expenses, when you factor in food inflation over the last 10 years, when you factor in energy inflation over the last 10 years now, yes, we've seen some deflation in energy prices, thank God, over the last couple of years, a year and a half. In general, over the last 10 years, we've seen inflation. When you factor those things in, we have not had any increase in discretionary income or incomes, household incomes in general. Not to mention, we have seen severe unemployment. We're now at a 1978 level for labor participation. Another huge problem. You add inflation to that, we're done. Because when you add inflation to that, we're already not spending. We don't have any money to spend now. Now prices start to go up dramatically because we're adding in inflation. The problem that producers are going to have, which I believe they're going to have right now, the problem producers are going to have is passing inflation on to consumers. Now, at some point in time, they're going to have to do that, but they're going to have a real problem doing that because they're not selling any product as it is. They start passing along their prices, that's going to be a problem. Well, if they don't pass it along, it's going to hurt their bottom line. If it hurts their bottom line, their earnings are going to go down. If their earnings go down, they give up those earnings as it adds to the share of GDP growth. You see where I'm going with this? It's a vicious circle. We are such a fragile place, a place we have never been before in our economy. It's almost there. We are to a point where there is no solution because any attempt at a solution is going to lead to bigger problems. And I'm not even talking about the global impact and the geopolitical events globally that we could be in store for. So you wonder maybe, if you are a partner with this ministry, you wonder maybe why I am urging people to have strong positions in cash, to be defensive. I am close to saying, do it now. I'm close to saying, do it now. Because I'm close to saying it's inevitable and it's going to happen soon. I'm not there yet, but I will say this, it's inevitable and it's going to happen. Some sort of a downturn at some point in time. And you've got a choice to protect some of your principal to the best you can. Look, if we have a major economic Armageddon, it doesn't matter what you do. But just in case it isn't quite the Armageddon, but just a depression and maybe even to the point where we're standing in a soup line, it could get that bad. You need to protect whatever principal you can, and you better have some cash at home.